Hey, morning. It's Tuesday, 15th of February. Hope you had a fantastic Valentine's Day yesterday. I'm going to run through some US markets for you. Well, my three favorites that I tend to trade the most and follow. Lots going on. Obviously, we've got geopolitical concerns, tensions, whatever you want to call it. The whole Russia thing going on. That's just hitting the headlines. That's having the most severe impact on financial markets at the moment. We're already suffering from worries over higher interest rates. That's definitely giving the stock markets a bit of a bashing, and of course potential for war is giving us further moves to the downside. Now, from a technical perspective, these markets are trading really quite nicely. So for example, the Emini S&P, as you can see here, we have this potential head and shoulders pattern. We already had one. I'm going to really zoom in on this now. We had one head and shoulders pattern already which worked quite nicely, and that gave us a real good profit earlier in the year, last month. There we go. Right, so this is at the top of obviously a rampant bull trend, which is exactly what you need for the correct conditions for a head and shoulders pattern. Now, the first head and shoulders pattern we had was, let me try and draw this. Here we go. What am I looking for? That. So the first head and shoulders pattern we had was kind of this one. That was the left shoulder. Then we had the head, and then of course the right shoulder was this one. And then once that broke, markets plunged. Now, I think that was the first worry over higher interest rates. The market bounced back beautifully to the 61.8% fib and the 100-day moving average all around this area. You can see even a little double top there. And that was perfect. We were getting into short positions on both those peaks, actually. Beautiful. Nice and easy. Now, the markets have turned lower again, and we have something of a bigger head and shoulders pattern potentially here now. Scrunch this up a little bit. This is what I'm very concerned about, or excited about really, because it gives us a really good trading opportunity if we time this correctly. So left shoulder, very much bigger head, and then obviously perhaps this is the right shoulder. We don't know for sure, but if it is, and if I'm right, and all the signs so far are that it is, because we've rejected the 61.8% fib, we've rejected the 100-day moving average. Initially, this strong support level with really good fib support around 44.30, 44.40, 44.30. As you know, that's been a real key level for me on the downside. Buying there worked initially, then we broke it. Now it's a resistance level that worked well yesterday. We held it. So pressure to the downside, of course, because we're now below that area, which also encompasses the 200-day moving average. So that makes it even more important. And then we will see if, look, the 23.6% fib held yesterday as well. All the levels are just really, really working perfectly as they should do. Don't really have any trend lines on here to speak of, but the fib levels and the moving averages and the price action, whatever, is all working really nicely. Now, the question is, do we come down here to the 4200 area and test what I believe is the neckline to the head and shoulders? Well, we're nowhere near it yet, so I'm not going to go on, but that Nasdaq, of course, has been in a huge bull trend. As we zoom in, we're seeing more of a bear trend developing in this market as well. Nasdaq hit particularly hard with talk of higher interest rates in the US. Technology stocks taking a bit of a beating, but again, levels working particularly well. I think we did talk about whether that was a double top. Anyway, whether or not it is, I don't know, but the market has come down, bounced back to the 200-day moving average. This level, my fib levels around sort of 14,400. Certainly has been a factor, so those levels working really well. If you were shorting around there yesterday, that looks good. So we are seeing a series of lower highs every time we bounce, that we don't reach the previous peak, and of course if we continue to see lower lows, that is basically the definition of a bear trend. Let's just have a look at it on the weekly chart. Probably a little bit more obvious from the weekly chart that we are developing something of a bear trend, but look how well my fib levels are holding just perfectly on that weekly chart. Of course, I put them on back at the end of, what would that be, end of November, and it really has given me a really nice roadmap going forward of levels to look out for. So I'm just going to continue to do that and obviously update the reports for. Now, when you look at the Dow Jones, it's been holding up a little bit better. Certainly a big bounce back from that 50% fib down there. More of a sideways trend, if anything. I can't really say that this is more of a bearish trend. But then when you look at the daily chart, you wonder, is this a head and shoulders pattern? They're pretty clear. That could be the left shoulder, that could be the head, this could be the right shoulder, which would be interesting, although the neckline would be very, very steep. This would be your neckline. So that neckline wouldn't be would be down at around 32,500. Once we broke that, that would confirm the completion of the head and shoulders pattern. So we're a way off that as well. Something to watch. Levels not working quite so well in the Dow Jones, I will admit. But again, looking more bearish. Certainly a series of lower lows and lower highs, the definition of the start of a bear trend. Okay, I'm going to make some more videos on some of the other markets, so please stay tuned. Actually, please do like, please do share, and definitely please subscribe, because as I update these, you'll get notification. I'm going to be looking at commodities and Forex and European stock markets today, so don't miss all.